back. But let's welcome Hemen Kapadia of KRChoksey Securities, who's joining in for a technical check on the markets. Hemen, hi, welcome to the show. Well, it seems as though the markets are in fine fettle. We've seen the FIIs buy in the cash market as well, and the Reserve Bank of India has now paused. So one is hoping that the inflation figures will probably help assuage concerns going forward, and the RBI would continue with that stance. But nonetheless, based on the technicals of the market, are you seeing further strength? How would you approach it, considering today is the last day of the week?
A very good afternoon, Ekta. Thank you for having me on the show. Like you said, maybe the markets could be a bit subdued. Not subdued. I mean, the market actually doesn't show that, but it doesn't reflect that. But yeah, participation could be just a little bit on the wane because of a long weekend coming in. Like you mentioned, I think RBI governor provided a pleasant surprise. The VIX has been consistently volatility index below 13 for some time now. You know, we had a spike up in the market, went to 16,850. We gone to 17.5, 18. The US VIX had also gone to 31. VIX has cooled off over there. The VIX has cooled off over here also. So I think that is a major point for bulls. And secondly, we were in this range between 16,850 on the downside, 17,200 on the upside. And we were in this range for almost a couple of weeks. So frankly speaking, now we've sort of broken out of this range, and broken out and how we've sort of made a fabulous move. The thing is, now we are getting close to resistance levels. So this would be a slightly important phase in the near term, in the sense we could just, walk into resistance. I mean, we walked into resistance levels. 17,613 is a resistance level as far as the Nifty is concerned. And if I were to look at corresponding levels for the Bank Nifty, yeah, we're almost there. So frankly speaking, time being, we might just take a breather, which would be actually good for the market. On the hourly charts, we look a tad bit overbought. So everything seems to suggest, keeping the long weekend in mind also, Ekta, we might just take a breather.
Okay, we might take a breather. But Hemen, in a market like this, what would your individual bets be?
Well, frankly speaking, there is no choice, Sonal. You have to buy. Ideally on a decline, but yeah. Firstly, favorite pick would be Reliance. I mean, sentiment-wise, weighted-wise, Reliance is in the industry itself. You know, this whole move where the market has turned direction is entirely because Reliance has turned. So I would go with Reliance first. We're at 23.40. It would be a conditional buy call because 3 days we've been range bound over here, Sonal. So I would prefer to buy Reliance at around 23.30, around 10 rupees lower. A stop loss of 22.80, a target of 24.30. So risk reward ratio 1:2, 50 rupee stop loss, 100 rupee target. Reliance looks good. It's a modest target. I feel Reliance should go past 2,500 in the current month itself. So the other stock is a buy call on Ambuja Cements. Looks good. Higher tops, higher bottoms almost coming in. Indicators have given crossover buy on the daily chart. Even the weekly charts are looking promising. So one can buy Ambuja at 385. Stop loss 375. Stop loss 370. Target of 415. This reward ratio 1:2. So.
Okay, all right, Hemen, we're going to let you go on that note. Thanks very much for joining in and giving us all of your technical cues, and wish you a good weekend as well. But let's move forward onto our segment.